Good morning. It's Tuesday, November 12th, about 6 a.m. Central Time. Overnight, the precious metals continue to crash 4 out of the last 5 trading sessions, with gold reaching the lowest level in 7 weeks. So looking at the overnight price action, and part of my process is I'll look at the overnight high, the overnight low, where were we at, and were any key levels broken. So if you look at the gold market here, high of the overnight session, 2633.40. Where is it last? 2607. Where was the low? 2595. So the market broke below a key psychological level, 2600. However, the market is trading back above it. So could it have been a rejection of those levels or just stop losses getting hit? That's something we have to think about and digest. Looking at the silver market, down 10 cents right now, 30.50 last. Overnight high, 30.88. Overnight low, 30.28. So middle of the session there. Where some of the liquidation really occurred at was in the copper market, down 8 cents right now at 4.14, sitting just above the lows of the session, down just under 2%. You're also seeing aluminum down 2.3%. Remember, China and aluminum are two of the best gauges where you can look back and forth. Consider it your thermometer for China and their temperament as far as looking at a key commodity. So I always look at aluminum, copper, steel, some of the grain markets like soybeans, and I can kind of tell what happened overnight in the Chinese markets. You have platinum down $10 at $9.59, and then palladium down $19 at $9.63. Looking at the other markets, some standout here is that U.S. equities are under pressure. And the thing is that if U.S. equities are topping, and this is the start of something big, those of you with concentrated mining stock portfolios are really going to feel the brunt of it, because many of you with those concentrated portfolios are going to get a position size reality check. You start to look at how Barrick Gold, how some of these large, very insulated gold miners, how they have reacted with the earnings season. They've really felt the pressure from inflation and have been unable to capitalize on the higher precious metals prices. So if you get the liquidation in metals and you get a reflation in the dollar, you also get 2-year treasury yields rising up. It's really going to be problematic for some of those different dynamics of the markets here, specifically in the precious metals and the mining stocks. So a lot of people are going to ask, why are these markets selling off here? And you take the gold market, for instance, it's the dollar strength and the perception of increasing growth, while inflation data is expected to tick higher. So this is all fueled by tariffs and tax cuts that are being proposed. So you get the dollar index going up, it weighs in on the gold market. There are periods of time where gold and the dollar have traded together. That was oftentimes when we saw rising geopolitical risk. We also saw complacency in the market as the Fed's path was projected to have many more interest rate cuts factored in. However, those interest rate cuts are somewhat put on hold because of the fact that the Federal Reserve has to digest what the new administration is going to implement and how these tariffs are going to impact inflation expectations. Now, this week, we will get CPI data coming out, and that's going to be tomorrow. We do have a lot of Fed speakers coming out today. I really believe that much of this data is kind of thrown out the window at the moment and is quite irrelevant because of the fact that Trump seems to operate at a beat of his own drum, where previously we can look and get the expectations in the nowcast models and really project where many of these commodities are going to go, what the reaction is, and what the forward guidance is on different key commodity inputs, things like the dollar and things like 2-year and 10-year treasury yields. Now, the ETF flows show you that the hedge funds are really unwinding their bullish bets on the gold market here. We've seen exchange traded fund flows turn less supportive, and with this widespread rotation into other different commodity asset classes, things like US equities, things like the Bitcoin, other cryptocurrencies, they actually look like they're finding some support and complacency in crude oil, which is hovering right around the mid-60s the farther out you go into 2025. Now, we did see a breakdown in the gold market below the 50-day moving average. Some people that are going to use a very simple system will exit the market on that, adding fuel to the fire of this sell-off in these markets. Now, silver faces those same headwinds that the gold market has because of the close correlation. However, the lack of Chinese stimulus transforming into a more robust economic growth, you're seeing that market continue to sell off. Now, the question is, will silver find support around a very large psychological level, that $30 range? We're going to have to continue to monitor that and wait and see. The gold silver ratio sits at about 85.5 to 1, and just really this rotation into people chasing momentum, people chasing US equities, small caps, the Dow Jones, and the cryptocurrencies are really taking the place. So it's nice to see the speculators that had came in the froth exit the precious metals markets, but it's also nice to see them there because it provides wider support in these markets. And if the markets start to push to the upside, they'll really chase that market higher. So, excuse me. So the question is, how long is this sell-off going to last? Because I get a lot of people on that. Well, Bank of America put out a report here on the gold market, and we saw the reaction within 1 day after the election, 2 weeks after the election, 1 month after the election, and 3 months after the election. And what had happened is 1 week after the election was really when we saw gold prices at the worst levels because the dollar index angled about 5%. It's literally written right here. So the dollar index rose about 5%. Gold futures get smoked. About a week later, we started to see gold futures rise from there. Then about a month later, they were only down about 6 to 5% from when the election occurred. And you go out 3 months later, that's when he's in office. And I think most of the bearishness in the precious metals will be priced in. Gold futures were actually up about 6.5 to 7%. So that's something key and important to note. And then also, why are these markets selling off? And if you look, it's just because of the fact that the dynamics had changed a bit. When you get the rising dollar, you get the rising growth factor going into the market, you get rising inflation. It tends to shift people as far as their factor style as what commodities are going into. So that's where a rotation comes out. You do also have the proposition that on Bitcoin that some of these different regulatory restrictions will come unglued, and that's why Bitcoin futures continue to see shallower corrections and people going into that market. I've seen some latest reports that indicate that another 12 months out with that Republican sweep, they believe that $200,000 Bitcoin is likely, and then also Ethereum at $10,000 is likely as well. So if you look at the commodities again, so now the fact that we've transitioned from the bullish trend on the precious metals to a neutral trend, we're breaking key levels of support, and we're starting to trigger some of these bearish trends. You want to look at what are those trend reversal points. Well, the trend reversal points are quite higher because of the increased volatility and breakdown. So markets are going to need to find some support, some consolidation, and then we could start to lift our way back up. So if you look on the gold market right now, your critical level of support overnight session 25.95, that's based on yesterday's volatility. If we break below that, we might see a small surge in volatility down to 25.63. The copper futures, 412 is your critical level of support. Below that's going to be 406. Silver, 30.11 is your critical level of support, first support on the day, and then below that would be a breakdown. You'll see how $30 will respond. You'll probably get some new buyers come into that market as dip buyers have been waiting for sub $30 that are playing for a longer term move of $40. Now the question is the $40, the $50 out of the question here? And I don't believe so at all. And the reason is because of the fact once you get through all this resistance, all these news headlines of who's Trump appointing for this, what's their stance on China, how things are going to play out with tariffs and things like that. Many of these countries have been through this tariff rhetoric before. They understand the ripple effects of what took place within their country. And Trump being the deal maker, they'll want to make deals for softer tariffs going ahead. So when you get the softer tariffs, I think that when you get that talk, that's when things start to stabilize and come up. Those are factored in and implemented, these smaller tariffs, and then you start to see China respond with how their stimulus measures will be, because their 2025 GDP growth forecast target is still 5%. So if they want to hit that level, they'll have to apply additional stimulus to counteract the tariff that they have. And that's how silver futures continue to go. And we start to see the $35 to $40 silver. So you're going to have to roll forward your 12-month price target on many of these markets. So if you're trading something like you're going for December silver or January or February, I think you've got to be farther out on the curve in order to achieve that kind of level here. So that's about all I got for you. That's a lot of stuff here. If you want to understand how economic cycles work and different breakdowns, this is one of my most dog-eared books here. And Ray Dalio says it best, saying there were only two big forces to worry about when you're trading commodities, growth and inflation, and that there are four different investment strategies, then with one doing well in each particular environment. And then also he wanted to construct an asset allocation portfolio that he thinks would do well. This is probably one of my most referred to books. A lot of people ask some of the things that I read. But if you've been beaten up mentally as a trader, here's one right here called The Trading Athlete. Talks about how athletes get injured. You look at Christian McCaffrey, guy got injured, and here he is, he comes back. How does he respond to that mentally? Things like that. So that's where you tick down your position sizing and you focus on small winners, build your confidence up, build your trading muscles back up, and then you start to get bigger, and you'll see Christian McCaffrey, 2 touchdowns, 100 yards receiving and rushing. So I'm just saying it, throwing it out there. So you got any questions? Longer video, but it was a lot to unpack. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.